let's move over and focus on the healthcare space, bringing you a conversation from the Nuvama 21st India Conference. I did catch up with the management of Max Healthcare and started off by asking Abhay about the impact of seasonality and performance on the performance this quarter. Listen in to a slice of that conversation.
Other than seasonality, what we are, which we don't know what's going to happen next year. Hopefully the same thing doesn't repeat, but I think everything else it's not really secular. As far as at least the insurance matter is concerned, that's way behind us. Seasonality was past season, that's behind us. But as far as the onco drugs are concerned, these are certain high-value medicines, which, branded drugs, where we had margins of about close to, let's say, 18%. But as a part of the new pricing for CGHS, where we've got an increase, one of the things that we got a decrease in effectively is the onco drugs, where the pricing has been capped to 70% of the maximum retail price. So effectively what that renders is that we'll have to sell for prices cheaper than what we acquire those medicines for. So clearly we've discontinued that. I think conversations are on with the ministry, and hopefully this will be looked into.
Okay. But what happens to the patients who want to access those drugs?
So that's the thing. The CGHS has its own dispensaries through which they can dispense these drugs, and the patients can get them directly from there. Now, I'm not clear. My belief is that, look, their purchase price may be higher as well. So, but on the other hand, ECHS and other public sector undertakings, that operate on CGHS rates, they don't have this provision because they don't have the dispensaries, and their patients will perhaps be unable to purchase it because really, I think they don't have the dispensaries to purchase it from, like CGHS, and the hospitals will find it very difficult to provide it to them to be able to sell below cost.
Okay, so this patented chemo drug issue is only linked to certain schemes or your institutional business. It's not for patients across the board.
That's correct.
The average revenue per occupied bed this time, it was up around 3% odd. What was the percentage of complex cases? Because that really drives the ARPOBs. And what is your guidance on the same?
So again, I'm going to sort of stay away from giving guidance on it. But having said that, we've also added, as you're aware, over the last 1 year, hospitals in Lucknow, in Noida, as well as some time ago in Nagpur as well. These are lower ARPOB businesses. So because these are lower ARPOB businesses, they would have a little bit of a drag on the ARPOB. Although you see a ARPOB, I think we need to look at it apples to apples. That means the erstwhile hospitals as a separate bucket, and perhaps the new hospitals as a separate bucket. Because the new hospitals, if they're in tier 2 cities, the ARPOBs and the EBITDA per bed may be lower, but I think the way to look at it is on the basis of ROCEs that they're generating. Because, eventually we end the business of putting the incremental rupee that we generate at attractive ROCEs, not necessarily at higher ARPOBs and EBITDA per beds. Having said that, the complex cases on a quarter-on-quarter basis are also basis seasonality. The second quarter typically a vector-borne season, so you have higher occupancy but lower ARPOBs, whereas the third quarter on its own, you'll have lower vector-borne diseases and perhaps higher ARPOB because you're doing more complex cases.
Mr. Soy, what's the latest with regards to the disruption of cashless services? Because that impacted revenues last quarter, but we do understand that, it's been reinstated. There has been an agreement which has been reached. There is an auto-renewal process as well. You don't see any more disruptions going forward?
No, most certainly. I think, there's, it was a disruption to the patients. And I think there has been sort of impact on not only on hospitals, but our hospital, but also the insurance companies, the number of complaints and so on, increased at that point of time. And, we've signed the renewals, like you said, and we hope and we believe because of the new mechanism that has been adopted, we will not have these issues occurring again.
Okay, all right, fair enough. Just give us a guidance with regards to Max at Home and Max Life, because both those segments are growing steadily. How much do you expect them to be in terms of contribution for the overall business and the growth rates?
So I think they've been growing at 20 to 25% CAGR for many years now, many quarters, many years now. Although, of course, they started on a smaller base. We certainly believe that they will continue to do so going into the future as well. Perhaps that pace should increase going forward because I see a huge space for them. Home care, I think, although it's the largest home care business in India, it's also perhaps the only profitable one. It does EBITDA margins of greater than 20%. In fact, I think one of the it's hamstrung by the fact that it's probably not covered by insurance, like daycare isn't covered by insurance. I think these are some reforms that are required. Home care, daycare, when covered by insurance, not only leads to reduction in cost because, the patient doesn't have to stay overnight to be able to get the insurance. But I think this will do very well as far as patient recovery is concerned as well. And just the sheer cost, I mean, to give you an example, home care, we do ICUs at home, and the cost of serving a patient at home through an ICU is less than 40% of the patient staying at the hospital.
All right. Well, definitely. But just coming back to the hospital business, and just wanted to touch upon the CGHS revisions. They come into effect and the maximum amount or the majority will actually show FY27 onwards. What is the impact that you expect on your business on account of it?
I think net we should see a benefit of about close to 200 crores as far as margins are concerned. There will also be I think a negative impact as far as GST is concerned, which should be 60 crores. So you probably take that out because I think most people haven't read through that. There has been a GST impact on medicines and so on, which defeats our margins by that much. So yes, but net, the impact of all of these changes is positive.